So unfortunately, I'll start again. So we have uptrends and downtrends. Uptrends are when the price keeps going higher and higher, while downtrends are when the price keeps going lower and lower and lower. All right, for a long period of time or for an extended period of time. So um, in an uptrend, or basically in a trend or in a range consists of two parts. A range consists of two parts or more. In a range, we have impulse legs and corrective legs. So impulse leg plus a corrective leg makes a range. So that is if we said here that impulse leg forms in the direction of the trend, while a corrective leg forms against the trend. So for example, if we're in an uptrend, all the price swings, all the moves that go up are in line with the trend. So those ones are called impulse legs. So everyone that goes up like this in an uptrend, they are impulse legs. Impulse legs. All these ones that move up, all these are impulse legs. All right. But the corrective legs are those ones that move against the trend direction. So in an uptrend, if we have any leg of price or any movement of price that goes down, which means that it's going against trend direction, everybody that's going down, those are corrective legs. Those are corrective legs. So in a downtrend, we can see that all the impulse legs are the ones that are coming down because the trend is downward. The trend is bearish. So the impulse legs are the legs that go down like this. Those are the impulse legs. All these ones are the impulse legs. All these are the impulse legs. All this. While the corrective legs go up like that, like that, like that. Okay. So a range is basically made up of an impulse leg and a corrective leg. Corrective leg. So once we've had an impulse leg and then the correction should start. Once that correction is over, we would have another impulse leg, and this new impulse leg will form a new range. All right. So that means what that means is that this area over here is a range, but once we go out of that range, we have created a new range, and this right here will be our new range. And if we keep on violating this, if we keep on progressing upward, like in the characteristic of an uptrend, okay, we keep creating new ranges. So in a trending market, the range keeps changing. So we keep on creating newer and newer and newer ranges as we go on. So we keep on creating new ranges, new ranges, new ranges. So that is what happens in the trending environment. So even in a downward trend now, we make new ranges as well. So we have a downtrend, for example, have a downtrend. So this is a range. This first one is a range. Okay, so it consists of an impulse leg and a corrective leg. Then after that range has finished forming, another impulse leg would appear, and that impulse leg will mark the formation of a new range. That impulse leg will mark the formation of a new range. So, and that new range will also have an impulse leg and a corrective leg as well. Okay, so same as an uptrend. An uptrend, The ranges keep going higher and higher. So the range will change. Once another impulse leg forms again, then we've created a new range. So the range will be the distance from the bottom here. So let me see. This range is from here, from this bottom to the top. So that is the area that we call the range. All right. So once this top gets broken, we have a new range that starts from the bottom of the new leg to the top of the new leg, the top of the new leg. So in a downtrend, we have the same environment. It keeps creating ranges that go lower and lower and lower. All right. So we can say this first range starts from here and ends here at the bottom. And the new range starts when we go below the previous low. So starts here and ends here. So that is how a trending market moves. So the range will keep changing. But then the difference between a trending market and a ranging market, or the difference between range as you are calling it here and the ranging market, is that in a ranging market, the price doesn't leave its current range. So let's say we were trending, creating newer and newer and newer ranges, okay? And then we get stuck. And then this one fails to create a new range by going above here. So it's only when it goes above here that it has created a new range. So if it fails to do that and starts moving like this, it doesn't go below it, it doesn't go above it, it's just stuck here. All right. We can say that in this scenario, the price is stuck in a range. So the range that we are stuck in this scenario starts from here to here. So the price is not creating any new ranges. So we now call this condition a ranging market, or an indecision, or a consolidation, or what else do they call it? Let's leave it at that. So this is a ranging market. We can say that the price is stuck in a range. So whenever the price is stuck in a range, okay, it's neither going up nor going down. This is a indecision scenario. So the participants of the market are still trying to decide if they want to keep pushing the price higher, or keep pushing, or start to take the price lower because the price has become too expensive. So as the price is rising, it's getting more and more expensive. So once we start ranging, people are thinking that, okay, is it worth it to keep buying this thing at this price, or is it no longer worth it? Should we start selling it? So that's basically what happens when price is stuck in a range. So this is a range, and these are also ranges. But in a trending environment, the range always keeps changing. The range always keeps shifting. But when it is ranging, the range stays in one place. That range is neither broken upward or downward. So at this kind of condition, we're just sitting on our hands and we don't know what to do. We can only wait for price to either go down or go up, to either signify that we are continuing the trend or the trend has changed till further notice. Right? So um that is that for anatomy of the range. Oh, so moving on to the next thing now. Um Let me check the teaching. All right, so we now went on to discuss about the structure of downtrends and uptrends. So let's just read this quickly. In the markets, we have highs and lows which are formed when price moves up and down. So, for example, if price moves if price moves up, it forms a high. If it comes down, it forms a low. If it moves up again, it forms a high. If it comes down, it forms a low. If it moves up, that's a high. If it comes down, that's a low. If it moves up, that's a high. Comes down, forms a low, and so on and so forth. All right. So, um, in an uptrend, we have series of consecutive higher highs and higher lows. Once this pattern is broken, the uptrend is over until further notice. So in an uptrend, the scenario we have is this: we have we have a point in price, and then from that point, price creates a high, higher low, higher high, higher low, higher high, higher low, higher high, and the price keeps moving until it forms a lower low. Then we know that this uptrend has been paused for some time. So that's how the market moves. So in an uptrend, we have series of higher highs and higher lows. So this is an uptrend. So in an uptrend now, we only expect higher lows. We only expect higher lows. We don't expect all these lows. We don't expect one low to go below the other one. So we expect them to keep going higher and higher. Only the highs can be violated, but not the lows. So that's what happens in an uptrend. But in a downtrend, we have the opposite scenario, of course. So in a downtrend, we have series of consecutive lower lows and lower highs. Once this pattern is broken, the downtrend is over till further notice. So in a downtrend, we have um, a point in price, then a low, a high, a lower low, lower high. This is called the lower high because it's lower than this previous high. This is called the lower low because it's lower than this previous low. So after this lower high now, it's go and form another lower low. Then from another lower high, then a lower low, then a lower high, then a lower low, then a lower high, and so on and so forth. So once this pattern is broken, so let's say the price moves like this, that means the trend has changed till further notice, or the downtrend has been paused till further notice. So the price may just go up a little bit. So that downtrend be paused. So it may end somewhere here and then start going down again. So the downtrend will now continue on the bigger scale because price is fractal. Okay, so it may now come again and do something like this. So this is a bigger corrective leg, then continue with another impulse leg. So that's how the price action moves. So in a downtrend, we create lower lows and lower highs, while in an uptrend, we create higher highs and higher lows. So that is that. And when price stays within a range without moving on to the next range for a long time, we say that the market is stuck in a range, or we call it a consolidation or ranging market or indecision. So we've said that before, right? So um that being said, we move on quickly to the next topic, which is discount, premium, and equilibrium. So um we said what is discount, and everybody agreed that discount is a cheap price, premium is an expensive price, right? So if you buy something at a discount, you are buying it at a cheaper price than normally is. You're buying it at a premium, you are buying it at a more expensive price. If you buy it at equilibrium, you are said to be buying it at a fair or normal price. So equilibrium is a normal price, neither expensive nor cheap. So in trading, you are looking to buy at a cheaper price and sell at a higher or more expensive price. Not just in trading, this applies in any business. If you buy something for the purpose of reselling it, you always want to resell it at a higher price than what you bought it for. Okay, so in trading, that's the same thing that we're doing. So we buy at a cheaper price and we sell at a higher price. So hence you'd usually hear the saying buy low and sell high. So basically we want to sell at a premium price and buy at a discount price. So let's look at premium and discount price on the charts. So let's look at premium and discount price on the charts. Let's look at premium and discount price. So we say that if we have a trend, Okay, so you can just look for any random trend, for example. Okay, so let me change. Let's use this downtrend now, for example. Okay, this is the same example we used yesterday. Let me change the example. Let me just check for something else. All right. So in this place now, we have the price making higher highs and higher lows. So we have a point in price. It makes a high, a higher low, a higher high, a higher low. Let me just zoom in here. Not stress myself. Okay, so we have this trend now. So price starts from here, makes a high, a higher low, a higher high, a higher low. So it's following the uptrend format. A higher high, higher low, higher high, higher low, a higher high. So this place it has not yet formed a new high. So when we are still here, we are still within this range. So until this one now is not a new range. Higher high, higher low, higher high. So now looking at this range, the best place to buy is at a discount price. So we're always looking to buy at a discount price. So now let's go and look through different points in this range. So let's say we're starting from here now. We usually use a tool called Fibonacci tool. So this tool here, we can draw it out. So any range that you mark out with this tool. So the way you use this tool is that you draw it from the top to the bottom of your range. So let's assume that this is our range here. Let me zoom in. Let's assume that the first one is our range. It's looking somehow. Okay, so let's say this is our range now. So we formed a low here, then we formed a high here. Okay, so after we formed this low and high, we now formed a higher high. Okay, so but before we form this higher high, let's say we knew already that this thing is about to start an uptrend. So we already knew. We analyzed the market, we did so many things on the chart, and we realized that this is the beginning of an uptrend. So what we'll be looking to do is that we'll try and time the start of the new range. Okay, so once a new range starts, that means the uptrend has continued. So we want to buy before that new range starts. So we can use premium, discount, and equilibrium by using this Fibonacci tool. So we'll draw it from the top of the range to the bottom of the range, right? So we would now be looking through it. So the top part, that is the higher part, this place is higher prices. So the top part is high prices. So that place is a premium price, premium price. So the top is premium. We call the top area a premium. Let me shift that thing so you can see it. Top is a premium. The bottom shaded area is discount. Why is it called discount? It's called discount because the price down there is lower, all right? While this middle line that we can see here, you can look at this middle line. Let me draw a line on the Look at this middle line here. Okay, so that middle of the range now, we call it equilibrium. We call it equilibrium. So it's the middle price. It's neither cheap nor expensive. So we call it equilibrium. Neither cheap nor expensive. Okay. So these two we use it to help ourselves to know the areas, not exactly where to buy or exactly where to sell, but to know which part is good for us to buy and which part is good for us to sell. So since in trading or in life, you are buying at a cheap price and selling at an expensive price. So if we have a prior knowledge that this is an uptrend, what we want to do in an uptrend is to buy, okay? And we want to buy at a cheap price. So the cheap price is discount price. So that means that if we have this range, for example, the part below, okay, all these areas here, the place that is discount, that is the area I want to be buying from, okay. But if the price is still up here, why is this thing doing like this? It's crazy, man. So the top area of that the Fibonacci is divided into two equal parts. So when you draw your Fibonacci like this rectangle is equal to this rectangle in their area. Okay, so they're equal. So the top part is a premium, the down part is a discount. So anytime you want to buy, anytime you want to buy, you are looking to buy at this down part, which is the discount. But anytime you want to sell, you are looking to sell at the expensive part, which is the premium. Okay, so that's just the difference. So in this scenario right now, we are looking at an uptrend, so we want to buy. So whenever price goes up and then comes down, we were waiting for it to come down to the discount before we buy. So if the price doesn't go down to the discount, if the price doesn't come down to the discount, we do not have an opportunity and we would sit on our hands. We will not buy the currency pair. So in this case now, let me clean up the chart. In this case, we have price from this is the range from this down to this up part. Okay, so what you can see here is that the price goes up and then starts correcting and it comes down into the discount area and it does not last long there at all. It doesn't last long. It went up and made a new range. Okay, so in this new range, let's say we miss this one, we miss this buy, you can come to this new range and look for a discount price. So the new range now will start from this low here to this high. That's the new range. Okay, from this low to this high. So we'll draw a Fibonacci from that low to the high. Okay, so once let me shift it forward so that you can see when the price came down. So once the price comes down into discount, we believe that the price is now cheap and we can buy. Okay, so you can see how the price just dips into the discount and quickly flies away. Okay, so this discount is the best area to buy when the price is still up here. You don't want to be a buyer because it's risky and you're buying at an expensive price relative to the range. Okay, relative to the current range, you are buying at an expensive price if you buy up here. So you only want to buy down here. Okay, so let's say we now buy there, right? So the price continues going higher. So we form a new range. So The new range is from down here to up here. Okay, so now we're looking for anytime the price can come down to this discount for us to buy. In this case, we got nothing, no chance, no opportunity. The market didn't give us a chance to buy from here, and that's okay. It's not every time that you trade. People try to force trade sometimes. If you try to force it, you get burned. All right. So in this case now, we don't have any chance. We don't have any opportunity to trade. So the market never came down into a discount area, right? So we'll keep moving on. The price has left us. It just flew away. Vroom. You can see that. You can see how high it went. So we lost an opportunity here, but we are not despairing. So since we have created a new range, the new range will start from here to here. Since we created under higher high, so we'll draw our Fibonacci again from the bottom to the top and look for whenever the price comes down into discount. This time around, it gave us an opportunity. So, um, what I want you guys to note is that it's not just every time it comes down into discounts that you just buy immediately. Okay, this thing just helps us to know which area is good. Okay, we are still going to learn other things that we can add together. You may never even use this premium and discounting later, but it's just for you to train your eyes to know where which area is favorable for you. Okay, if you are buying up here, it's not favorable for you. It's when it comes down into discount that is favorable. Okay, so the price comes down into discount in this scenario. Why is my network shaking? I just hope my recording is fine, so I should not do like yesterday, because that would be a disaster. Please, guys, give me a few seconds. Let me get my phone. Okay, yes, I'm back. All right, so this premium and discount stuff is just for you guys to train your eyes and to know which area is favorable. So if you are selling, the only place you want to be in the trade is when it goes to a premium. But if you are buying, the only time you want to buy is when it goes into your discount area. So that is it. Just understand this simple concept. So now we've been talking about in a bullish scenario in an uptrend. What of in a downtrend? So let's look at this downtrend for example. Are you guys still here?
Yeah, yeah.
Okay. All right. All right. So look at this downtrend now. We have a range here. So from here to here is a range. So we can draw our fib goes down there. All right. So it got to fair price. All right. So it got to equilibrium, but it didn't really enter the discount. So we still don't have an opportunity. Later on, you may learn how to still enter the market here, but that's not yet time. It's not yet time for that. But let's understand this simple concept. In this area now, we went to equilibrium. Equilibrium is fair. All right. You can sell at equilibrium. You can buy at equilibrium, but it's not the best area. Okay. So the best area is to sell at a premium and buy at discount. So we'll move to the next range. Okay. When we created a lower low, we move to the next range and then try and see if we can get an entry. So Fine. In this case now, the market entered a premium area, so we can sell there. You can see how aggressive it moved. You can see how much money could have been made here. All right. So the market keeps on progressing just like that. Okay. Enters a premium and sells off. And that example is here. Gets to equilibrium and sells off. Never enter the premium like that. Okay. So um that's basically how it is. In this case, this small range here, we enter the discount. I don't know if it's clear, but we enter the discount here. Let me zoom in. Yes, we enter the discount down here. All right. And then the range now changed. The range changed from down here to up here. The price kept on flying up. So we got to equilibrium, but never discount. We never got to discount in this case before the price went up. So new range here again, new range from here to here. We got into discount and the price, the new range started. So if you got in somewhere around the discount area, you would have made money in this case as well. So yeah, that's just how it works. We want to buy at a relatively cheap price and sell at a relatively expensive price. Okay. And how we know that it's relatively cheap or expensive is by attributing where the price is to the current range. Okay. So this is the current range in this case. I will not now draw my Fibonacci like this. Okay. This is not going to make sense. Okay, this is not going to make sense because this is the entire range in this case. We're just catching the entire range, and it's not going to make sense to use the entire range except if the entire range has started correcting. Okay, so if the entire range is correcting, then we can draw our Fibonacci like that. My network is against me tonight, man. Um, anyhow, do we understand the concept of discount premium? Sorry, I had to run like that. I just had to get all this part over with. Do we understand it up to this point?
Yes.
Anybody have questions?
Yeah. I understand it very well.
Okay, okay. No questions, ba?
So this no.
Okay, okay, okay. So, um, okay, yesterday, your assignment. Yes. For those of you that missed the assignment, what you have to do is I said I will show you a video of how to use the Fibonacci tool to get the equilibrium, discount, and premium. So I posted that video on the group yesterday night. So you guys should go to the group and check it out. I will tag the video after this class. So that video is on the group, how to get it. So you will find 30 ranges, okay? Could be an uptrend or a downtrend. So an example of a range is from here, from here to here. That is a range. So this range is currently in premium. So all these areas we can start getting ready to sell if it is a proper downtrend. Okay. So this is a range here. You find 30 ranges. You can say this range, one, another range here, two, another range here, three. You can say another range here, four. So yesterday's assignment was very easy. If I start doing the assignment now, I'll finish it this night. I'll go back and find another range here. Abi, I think here, five. So just do things like this. Do it 30 examples for me. Do 30 examples, okay? So this is an example of a range, but the price doesn't continue. It takes out this high. So that means that the downtrend is paused till further notice. So we kept on going up, 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 up till later on when the buyers got tired and the sellers took over again. So This upward movement is a correction of the entire downward range from here to here. So we can now draw our new range as this place. And you can see that we got into discount before selling off. Okay, so it got up into discount area here. So basically, find 30 ranges, whether in an uptrend or a downtrend. Don't go and give me a, I think some of you marking um an upward range in a downtrend. No, if we're in a downtrend, only mark the ranges that are going down. These are the only valid ranges. This one, that's a valid range. This one, that's a valid range for you. This one, this one, another valid range. Okay, these are valid ranges. Don't come and say in this downtrend now you now mark something like this and say that's your range. Okay, something like that. This area is the last place. This is where the trend change. Don't come and mark here as your range, right? Or you now come and be marking um this place like this as a range. Okay, so the trend is bearish. Okay, so in a bearish trend, we are only interested in selling. So only all the ranges that are going down, that's what you're interested in. Once the trend change, you're just waiting for the price to continue going lower. Okay, so learn that thing from now on. Like learn it from early in your trading. Okay, learn to trade with the trend. So once the trend has changed, just we'll analyze the chart and know that okay, has the trend changed totally or it will resume later. So yes, that's just basically all I want to say.
CJ, I have a question.
Yes.
In an upward trend,
Mm.
when you mark the range, do
Yeah.
you label it as does the premium come down and then the discount go up, or
No,
it
it's
still
it's
remains
always the same.
the premium? Okay.
Yes. So you can see it now. Look at this uptrend now. Sorry, this downtrend. You can see that up is still premium and down is still discount. In a downtrend, you don't want to sell at a discount. It's like selling your goods at a cheap price. So maybe you're a spare parts dealer. You bought an engine for 400,000 naira.
So, yeah,
Yes.
uh, that's in the downward trend there.
Uh,
You sell at premium, not at discount.
yes, you sell at premium, not at discount.
Then in an upward trend, you buy at premium, you
You
buy
know,
at discount.
you buy at discount. So you buy cheap and sell expensive.
Then downward, okay.
Yes. So the Fibonacci does not change. It's just the same thing. Do we understand? Do we get it?
Yes, yes.
Okay. So that's basically assignment. Very, very simple. Just find 30 ranges. If it's an uptrend, just draw the range going up. All right. So draw the range going up and show me premium. Use a rectangle. Let me continue reading the assignment. So I said use the Fibonacci tool to show the equilibrium, discount and premium areas. And then you take screenshots of those 30 ranges. They may be it may be one sorry, you may have one more than one range in a screenshot. Okay, so one screenshot may contain this. Okay, I will still accept that. It doesn't have to be 30 different photos. Okay, so just combine all the screenshots, put it in a PDF or in a document, and then send to my DM. That's your assignment. Very simple. Yesterday's assignment was very simple. So I guess you understand the assignment, yeah? Okay. I'm going to talk about four phases of the market before we conclude this. Okay. Before we conclude this, we talk about four phases of the market. In fact, I won't talk about four phases. I'll just talk about like one or two. Tomorrow we'll continue so that I won't get confused. Okay. Hold on. Scheduled. Hello?
I swear, big shot this night,
I
guy.
swear,
Uh,
guy, I've never
Alpha.
been very big like this, and everything in
Oh,
park
oh,
like this.
in the,
But this
this is
guy
an
has come
MTL.
back.
It's an
Okay,
MTL
this
issue,
guy
guy.
has come back.
Sorry. Let me.
Okay,
Empty,
sorry, sorry.
empty, empty. I want to mess me up this night. Let me just start and that recording. I don't want what happened yesterday to happen again. Let me start and that recording first.